Friends, how are you? Igor Pechkovsky is here, Windermere Bellevue Commons, your trusted real estate advisor on the east side, Seattle metro area. Today we have another market update, and I have a lot of good information for you. It's been probably 2 months since our last one, and we will cover today three things. Thing number one, we'll touch base with the economy, where things are, where the interest rates are, and how it prompts the market to act. Where two, I'll show you where the latest numbers are as of months of January. It's not a surprise to me that we have a market that we have, but activity picked up, and I'll show you exactly how. And we'll finish it with the three. We'll address tech layoffs really shortly, and we'll try to make it all in a nice educated video. And if you will like it, and even if you're not going to like it, please like it and share it with your friends. Subscribe to the channel, I would appreciate it. So let's get started. And dive into it. So we had really boiling inflation last summer at 9.1%. So inflation moved everything. Increased interest rates moved the market. How did we get there? As you can see on this slide, January last year, 7.5%. We peaked in June at 9.1%, and from June we went downwards to 6.5% in October, November, December, which is really good. But how did we get there? Well, we got there by increased interest rates, which slowed down the market, and I'll show you the numbers how. But back in March of 2022, the interest rates increased by 0.25, 25 basis points, then 50, then 75, 75, 75, 75, then 50, and then 25. What does this mean? Well, it means two good things: that inflation is cooling. We'll see what the future months numbers will show. But what investors looked at as being really good news is that the latest raise of federal interest rate was only 25 basis points, and so far they said that another two that will be coming in February and March supposed to be also 25%. So that means is that we feel like the market is at the bottom so far, and the market in January had been moving. We're not out of the woods just yet, but at the same time, it seems that the worst might be behind us. And look at this January jobs report that came out in the United States for 2023. Look at this number. In January alone, economy added a little over 500,000 new jobs. I believe the exact number was 517. So the real question is, so far in the economy, how much longer will the Fed increase interest rates? Was it going to be a marginal percentage, or how much more damage and pain will they endure on our economy? Because if things are good and we're dropping inflation down, and their rate, right, their preferred rate would be 2% of inflation, and they continue to increase rates, we're gonna find out in the next couple of months of how that will affect the economy itself. But as of right now, that 25 basis points being a really good news to our housing market. And let me show you how the market reacted and what are the numbers. So with that being said, let's go into the east side and review the numbers. Buyers, finally, they were waiting for the bottom, right? They didn't know, is it continue to go down, where things might happen, what might not. They right now feel like it seems like this is the bottom. The Fed might not be raising rates as aggressively as before, so they can get out and buy. And in January, we had seen quite interesting things. Let's look in the inventory. So inventory, 1.4 months. So comparing to last year, 0.3, of course, there is more inventory, but comparing to December, in December, we were at 2 months of inventory. So inventory started to move quite faster. Now we are at 1.4 months of inventory. That says a lot because inventory had decreased. But my favorite part is, look at this median. So there are two numbers here. One, you could see year over year, January to January, we're down 13%. And I'll show you another slide right after this. So yes, because from January all the way until April, prices were growing. So that percentage gonna go all the way down to minus 23%. But the median is $1.32 million. Last month we were 1.29 in December. So we actually, the prices jumped $30,000. The prices went up for the first time since last summer. January actually added the equity, and that says a lot about that buyer's confidence. So look at this, over asking. Of course, 8%, and compared to last January, 71%. Of course, last January, we didn't have any inventory. We have now more. But the market been, improving. Still, it went up, not down months over months, but up. And that also says the reason why, if you look at this, it looks like a complicated graph, but it isn't. If you look at this orange dots at the bottom, at the October 22, the highest of interest rates, we were at 6.9%, almost 7% on average for 30-year fixed. Today, we are right around 6%, and rates got stable. They went down a little bit more. Maybe they're going to come up a bit, but rates are staying relatively the same. And our market made minus 23% all the way from 1.72 to 1.32. That's a big drop that already had happened. That slide says a lot. So January overall been great. Inventory went down, the confidence sparked. We increased, $30,000 on the price. That's the east side. Let's look through Seattle and Snohomish County. So Seattle, a very similar story. Inventory, 1.3 months. In December, 1.7. So inventory been moving. Of course, comparing year over year, last year, as you could see, like no inventory, crazy prices, but 1.3 is less than a month prior. And the median actually still up year over year. As you could see, like Seattle didn't really decline. It didn't, I was giving always hard times to Seattle because it didn't go all the way to the moon as fast as the east side did, but it's relatively the same. So prices, it's still more expensive to buy today than a year ago, because a year ago, the interest rate was at 3 at the same price, and today is at 6. So you kind of still wish you had bought a year ago. So in Seattle, 13% over asking, it's still a lot. Like, it means that ask any buyer, what kind of home do you want to buy? Well, Igor, I want to buy the best home there is. Well, if it's the best home there is, probably another 13% of buyers also will be looking at the best home there is. It sells, and it sells still over asking. And here's a fun, cute table to compare the two. Last year, prices right around 800. Today, still right around 800. Principal and interest payment last year, 35.25. Today, 49.59. That's even that today our last multiple offers, a bit more inventory, which is good. But at the same time, that's a huge increase of principal. That's like 41%. Is it? Yes. 41%. I read it. I'm not that smart. But 41% increase in principal year over year. So you get more inventory, but your payment changed quite by a bit. Let's look into Snohomish County now. My friends, Snohomish County is not an exception. We had market move in Snohomish County as well. Look, the inventory is 1 month. That's not a lot of inventory. Last month, I think we were either at 1.6 or 1.7. I can't remember. So inventory had dropped from the December months, because these are numbers for January. We do not have a February numbers out yet. So 1 month of inventory is not a lot. It's better than the last year, of course, but it's not a lot, and it decreased. Median price didn't really change that much since the last year. We're talking about exact same thing happening, right around 700,000. Interest rates had changed, the price hadn't. So really, we had seen on the east side the decrease of 23%. Think about it, that's a huge decrease. And right now we've seen not a bad bump, 30 grand a month, just as a normal thing that we would have seen. Because think about it, I remember beginning the end of 2021, the market on the east side moved 100 grand in 1 month, 100,000 in a month. That's insane. 20,000 in a month, that's a normal east side market like we had before. So of course you'll say, well, Igor, it's too early to say and all of that. You'll see. So Snohomish County over asking 14% comparing to 60 last year. You didn't want to be it, right? Like, who wanted to be in multiple offers? Nobody. But right now you have a good, decent chance to still have more inventory to get out there, find a better home, and, like, not to have to be that crazy. It's a perfect time to get out there. So here's the numbers. As you can see, still average days in market 8 days. That's really, really fast. So with that being said, this is my Snohomish numbers. I've got another special slide for you right now, and we'll talk about the layoffs. So another special slide for you. The reason that we changed this slide a bit, and I didn't want to show it to you before in the format that we had, because always when you look at data and you go online and I see all of these videos, oh my God, end of the world, all of that. And I watched a few and they completely do not make sense to me. Just first of all, they either do not have any data or any slides at all, or it's a bit different market, or everybody could see the data in whatever the way that they would interpret the way that they would present it to you. All right, it's been a long day. It's Friday night. This is my last task for the day. So look at this. If here you have January 22 to January 23. You could compare, first of all, the average sold price of a year ago to what it is now. And you could see, for example, you have to pause this video to read this stuff. But I'm looking at Mercer Island. Last year, 3.7 million. Today, 2 million. Damn. I mean, that's a lot, right? So when people are like, oh, it haven't started yet. No, like values had adjusted already. Eastside 23% buy. So look at that. But many others, let's look at East Bellevue, 1.8 to 1.4. That's a lot, right? That's a big thing. But a lot of markets here, if you look at Seattle, they really, like Kent, for example, like relatively at the same average price. Linwood, like 100 grand difference, and so on. So review this slide. It's a very good slide. But my main point on this is new listings and total active. So the new listings in the months of January, that's the first number. For example, let me show you east of Lake Sammamish, all the way at the top, 94 new listings and total active 114. It means that 94 in and pretty much 94 out. The inventory sells. So the closer the two numbers are to each other, it means that they do not add on top of the active, and now it's a double. It means that they come in and they come out. And in many of those cities is the same thing. So Renton, for example, 36 new, 46 active. That's good. Woodinville, 82 new, 104 active. It means that these homes sell quite a bit. There is not that much inventory as you think it is. All right, so I know it's been a lot, but what I meant to say is there are a lot of misinformation out there online. I've seen those videos. I know what you've been looking, and sometimes I get criticized. Oh, you just bring good news. Well, I'm in it every day. I'm on the market every day. If you have friends that are actually looking to buy right now and they've been shopping, they will tell you there is not that much inventory. That will tell you that the homes that they liked sold in 5 days. It's a reality. I'm not saying it will be crazy. It's not going to be. The interest rates are still at 6%. These are expensive interest rates, but good homes sell. They always did, and right now there is more confidence in the market, and the market went from inventory from 2% to 2 months of inventory to 1.3 on the east side. That's not a lot of inventory. So let me wrap it up with this slide about the layoffs. I have managers in Microsoft, Amazon, all of that. People ask me, how will it impact the market and all of that? I personally believe it's not going to impact the market as much. These companies overhired people in the last 2 years. This slide is just one of many. Yahoo Finance, you could pause it and review it. Just shows of how few of the people that are being laid off compared to how many they had hired. If you think about it, it completely makes sense. Those companies, pandemic starts, you have, everybody gets on Zoom. Dell starts selling computers. Microsoft sells a lot of product because everybody need to be equipped to work from home. There was the huge surge. There were a lot of money. Interest rates at 3%. right? It's free money, everybody booming, nobody wants to be missing out. And today, they're restructuring, like it's a different economy. They have to get back to reality and get some of that weight shaved off. I know this is not the best, example, but you understand what I'm saying. Personally, I believe there is not enough. I do an open house and 40 parties show up at that open house. We do not have that inventory in Seattle. There is no way to find it. It takes 2 years to build one house for one family. It takes 2 years. There is no upzone, there is no land, you guys. So if you are looking to buy, you still have less multiple offers, you still have a bit more inventory, I would call us today, call me, and we'll figure out the rest. You have my number somewhere on the screen. Thank you very much. Igor Pechkovsky, your trusted advisor on the East Side. Please subscribe, please share this video. I appreciate it. See you next month. Bye-bye.